I don't know if he still is, to be honest, but
it'll be Wednesday again for the tariff ruling, right?
4-point gain gold, sold half.
I've been kind of out of the loop.
I believe. Oh wait, no. There's something on. It's something with the Fed, with Powell's replacement on Wednesday.
Gold new pre-market high. Looking for 760. Just hold all our psychs over this all-time high now.
All right, minutes all open. Let's open this market out. Let's have a great start to the week. I'd like to see us take out London low if we can, but
no, today. Supreme Court is scheduled to give opinions today at 10 a.m.
oh, it's today, huh?
Yeah.
Lovely. Yeah.
What time was that? 10 a.m. you said?
Yeah.
Okay.
Yeah, I probably don't want to be in anything going into 10 then.
Good morning.
Good morning.
Good morning.
Yo, good morning.
Minxie.
What do you guys want?
There's the NQ pop.
Kind of hoping we're going to go up to like 290 and reject. Just take a short.
Let's see. Little Poppy. There's your
Pretty
London
fast
high.
pop.
Yeah, open.
I'm just going to chill.
I could potentially look for something short off this 320 area. There's some of our individuals.
They're
Gosh,
popping it. They're
everything's
popping it.
taking it. CoreWeave's down almost 7%.
We're at VWAP at 314.
Only thing I have green is Netflix.
Yeah, right. Well, they have earnings tonight too. That's another thing.
Yes, they do.
That's crazy.
Yes, it's brazy.
I'm gonna add a ladder long gold here. 3-minute 20.
Wow, Meta's getting smacked. That looks gross, jeez. Making new lows below last night's low.
It's a little too volatile for me to like do anything, especially with my tight stop losses. So I'm just going to wait.
And that one candle was like 75 points, so.
6-point gain gold, sold half on the ladder.
Yeah, be careful on your sizing today, guys. Really matters today. This volatility can screw you up quick.
Rejected right off of VWAP there.
RTY is looking really good there. YM, nice bounce. Those don't really care. They're just cruising. While silver's pulling back and it's at 94.50.
Yeah, that's funny.
That's crazy. Wow. Can't believe that. Next fib I have on that is 101.20. See if it ends up.
Jordan, is Vanquish working?
Mine is.
It's telling me my sign-in's incorrect, which it shouldn't be. It's the same sign-in I use every time.
No, mine, I'm in.
They kicked you off.
Yeah, I'm ugly.
You've been too profitable.
I'm fugly.
Man, I wanted to take a short up at that 290-ish, but I don't want to play with this price action right now.
Yeah, it's quite volatile, right?
Yeah.
Which I'm fine with, but I need extreme clarity.
I almost shorted off of VWAP, but just didn't want to put it on.
I'm just gonna wait.
Mm-hmm.
I want to see us tap into this 320 here. I've spot that I would be looking short out of from there. See if we set up anything.
It's pushing.
Gold pulling back, still up 3%.
If we come back down and hold 300 or like 290-ish, I'm gonna long.
For that. We have midnight open at 380.50. Could rebalance that here.
290 is a good looking spot.
Then I've got resistance at 368, 370-ish.
Damn, this thing's strong. See if RTY and YM continue it.
VIX is pulling back a little.
Probably better off, like if I can go today.
A little bit of rejection at the midpoint of this gap.
Yeah, we do have a gap to fill. Or can we refill it? Need to check.
I mean, I know we have the Sunday night opening gap to fill still. We never filled that. I don't know if we do that today, though. It's a big-
25,
big gap.
315. Oh, no, that's not it. What am I looking at?
That view up.
Thank you. We've got
Look at MU and SanDisk. Just no worries. Straight fucking up.
398. Okay, let's see if it holds around here. Nope.
ES looking a bit weaker, not topping in the same spot NQ as. A little bit of divergence between the two. Still looking strong though.
ES looks better to break that 7 a.m. high.
Meta's trying to hold on. AMD's ripping, looking pretty good. Nvidia's not though. Right at lows. Google popped, pulling back a bit. Amazon's choppy. Tesla's at lows. Microsoft's trying to hold on. Apple. Kind of a mixed bag throughout my watch list.
NQ short bell breaker.
That. What a BK. Sniper.
Good morning.
Good morning.
Good morning.
Reminder, we do have that data at 10, and then what? Nats, you said that.
Yeah,
what else happened
the
at 10?
possible opinion at 10 again.
Yeah, oh Lord.
What data did we have at 10? I didn't
Pending
see
home
anything.
sales.
Today?
Oh no, that's tomorrow. That's my bad. I apologize.
I'm sure it's gonna be clear at 320.
Watch ticker OKLO.
It's because it was shaded on my calendar. It's shaded the same color as Tuesday on Wednesday. Apologies. That's tomorrow.
Damn it, Jordy, I didn't take my long.
Because of that.
You made me look.
Good morning.
Morning. How are you doing?
I'm doing amazing, guys. Kratos made another all-time high despite
Oh,
a big red
let's
market.
go.
That marks
Okay, I'm gonna put spread.
7 days.
Grab put spread.
Yeah.
On which name?
One second. NDX, I sold. You could sell a couple different strikes. One I got was I sold the 24,510 put, bought the 24,460 put. I'm gonna sell a 24,550 as well and buy a 24,520. I mean, I'm 2% extra out of the money here. And those contracts are
Full position, but moving my stop and profit. Still in
those contracts are 97 to 98% probability to profit.
Here we go. There's some good stuff. Nice. There we go.
Rest half, MNQ 30-point gain.
Nice.
There we go. There's 60 if you took my entry. Good stuff. Good stuff.
Let's go.
Gold trying to hold the 10-minute 20 EMA for the longs. If 70s, 80s fail here on NQ, you see 20s, 30s, which lines up with London or below 224.25.
I'm gonna wait. If we go below 230, I'm gonna look to take a short. Just not right now.
Oh, I trimmed. I meant to take it all off. That's okay. Take a trim, I guess.
Yeah.
I still have it at 321. I'd like to catch 100-pointer on spaces. Can you give it to me, NQ, on the runners?
That'd be nice.
You got it, bro.
I have my stop and profit. If I get hit here, I just gotta take it all out. That's totally cool.
Still got midnight open above us. Decent chance we go rebounds to that. 380.50. EA looking all right, trying to fill
Trail
most
stop
of that
hit,
gap.
MNQ.
And that. Wow, UNH just flying. Did gap down.
Yeah, Apple's reaching for those. There was ServiceNow news with OpenAI earlier. It popped like 5% in the pre-market. It's only up 0.4 right now.
That's one of those where it's like, oh, it's a bull flag, and then just keeps flagging to the downside all day.
Let's see if there's anything. When are their earnings? Their earnings is this Wednesday. Sorry, next Wednesday, the 28th.
Yeah, we got a lot next week. Y'all better buckle up.
Buckle up,
Yes, sir.
you big bastard.
Probably gonna be fun and volatile.
MNQ short, bill breaker, fake out, breakout, scout.
Hard to trust some of these pops on single names.
Gold bouncing off 10-minute 20 again. Buy red, sell green. Ladders in profit, slightly red on the initial position, both halves.
It's like still holding up.
Spectacular.
Microsoft
Got that big
code.
gap to fill. Silver up to 7% now. Trying to get bought up on this little dip. Next fit projection I have is 101.20, 101. See if it gets there.
Cute.
Tesla pre-market low and 3-minute put in a swing failure pattern wick. See if that can get some momentum.
Yeah, it's taking out these range lows from January 8th. Kind of sweeping them. We got that gap above us to fill potentially.
I grabbed the service now. Lotto call for next week.
Or
It's a hit. It doesn't. It doesn't. It's just like at this spot, you got great RR. You got the earnings run up too. You can catch some juice on the contract.
I see what you're saying, Joe. At the end of the day, they still are one of the agentic AI leaders.
Who is?
ServiceNow
Oh, okay.
with direct agents.
I do like those calls on now. That is something that Will was talking about on Friday, one of our dumpster diving trades.
Yeah.
I did sell at SPX put credit spread.
Yes.
Yes. You can get some pretty decent premium right now.
Mm-hmm. Mm-hmm.
I was going to go like super far out of the money to play it safe, but I was like, I'll come up a little bit on the strikes because the premiums are hot. So we'll see.
yeah, I mean, I like the spot that we tapped into to look for short, but the dip we took, how we're respecting order flow to the upside, I'm not seeing a setup short at all, personally. So.
If you click this view up in POC, I think
20-point gain, MNQ covered half. Fobo.
Nice.
We're back in the trap zone.
If sellers want to take control of this, they have to close under the London Orb high, 289.75. That's the fight. Can buyers close above VWAP or can sellers close below London Orb?
Yeah, as long as we're respecting all order flow to the upside, I'm still got to think that we need to take out these highs, even though we're in an area I like to look for short.
Mm-mm-mm.
No
Scaled
short
a little bit
activity
more
there.
of my gold ladder there, quarter position left.
Just gonna wait. Too legit to quit.
That Tuesday morning consolidation, huh?
Damn right.
Coming off of a holiday trading midtown.
3M could be interesting here. The earnings gap down because they reported this morning, hit daily support, and it's now over VWAP. Might be one to watch.
still looking good. Oh no, as of now, I expect these highs to get taken still. All order flows being respected to the upside. If I tried to switch out of here, I'd be short, but not seeing it yet for me.
Mita's putting in a new high day here.
Ah, she's doing it, huh? Yes, she is. She's a little nasty at open, but recovered.
I don't know if I can trust it though, with possibly stuff coming out at 10 and things looking kind of ugly across the board.
Agreed.
I don't think we have any data today, though.
What's the?
But when is when are they supposed to?
Hamana.
Yeah, pretty much. That's what I remember.
Yeah, they start at 10, but they read them manually. They're not like posted instantly online first.
Okay.
So it could be 10:05, it could be 10:15 before we know
Yeah.
if it's the tariff ruling.
So they're okay. All right, that's what I wanted to know.
Yeah, but it starts at 10. Yep. So 10 minutes, we'll start to possibly see something.
I'm flat, but upside.
We're flagging here, by the way.
Yeah. I mean, even though I want to short, I can't when we're just respecting order flow like this. So yeah, take out the highs. Midnight's 380.50. Take that out. Maybe we see Asia at 438.50. Take out those highs. RTY flagging at the highs, looking good. Still only green names on my watch list: Netflix, UNH.
God, they
UNH
have
been
them in
cooking.
queue.
Weird.
Oh, new high day. Bye bye. Pop pop.
Got new highs.
Spreads are already up 70% here.
What?
Let's go.
Yes, you drain them, baby.
Drain 'em.
Damn, son. Let me see what mine are up.
Damn, son, where'd you find that?
I'm only up 25%. Knox, what kind of bullshit is this?
Fuck you.
What? What the fuck? What the fuck?
What
I'm
the
also
hell?
far out of the money, so it's just extremely draining it.
The ones that you can go super far out of the money are kind of nice because, like on SPX, you can sell them at 60 and they'll just go to 30 and you can get 50% like super quick.
Yeah.
Right. Well, I am currently at break even on my SPY calls and up 25% on SPX. So let's go.
Let's go.
Looks like SPY and ES kind of a little bit weaker than the Qs.
Yeah, they are.
I'm sitting on my hands.
See if they can get above this. Take out at midnight. Video's trying to find a bit of a bottom here. Google recovered right back at the highs.
Are you guys at home now, Jordan? Oh, yeah, I think you are.
Yeah.
How was your trip?
Oh, it was good. It was freezing though. 20 degrees the whole time, dude. It
Oh, that's terrible.
was a good time though. We had a lot of fun.
Good.
But
Welcome to the East Coast, baby.
I'm grateful to be back in this weather.
Dude, it's like
Oh.
55 down here and everyone's mad.
We're about to get hit with some, I think it's going to be 26 this weekend and 85% chance of snow.
Oh,
It's 15 for me right now.
oh,
15 degrees.
Yep, that's what it is over here.
What the heck?
The low today is 8.
Joe, it's gonna be like literally 1 degrees in the night for like the next 5 nights.
I know, dude.
Oh my God. You can't go outside.
Yeah, no desire for that. You know,
Yeah, it's gonna be
So,
disgusting.
if I walk outside and it like physically hurts to breathe, it's probably cold.
It's like when you're exercising in the cold and like you taste it. You know what I mean? Yeah, not good for business.
Brutal. Still respecting order flow. No shorts for me. Don't yet, at least.
Okay, no breakout.
Bulls are sideways now. Ain't doing nothing.
From the gamma exposure and stuff on ES, I'm showing like a 67% chance of breaking 6900s. No other levels are very close. And 6900s is negative gamma exposure, it's not positive there. I believe we're still quite short gamma on both, yeah. So trend, I'm surprised that we're chopping then.
We got a few minutes here.
See what they want to do.
Yep, Meta initially rejecting order block for pre-market high.
We're still flirting with PSC.
Yeah, I'm just waiting for that news now. Just waiting.
Based on lows.
We're at some positive gamma exposure right now at NQ. There's a little. Right now, it's pretty much flat. There's pretty much no exposure at 25 500s. But yesterday, or on Friday rather, it was a little negative spot. So a bit easier to break above if we do get back there.
NVIDIA is pulling back.
Inviter.
Yeah, I made a new low. Trying to bounce again. Still think based off order flow, we continue to see highs on NQ. Midnight open about to get taken. Asia highs above that at 438.75. The next big spot. Above Asia high. Gonna have to be looking for shorts again in that area. Cruise it up. Hey, Pill, you still trading gold in there?
Yeah, my ladder's in profit. I'm down like 4 points on the initial position.
Nice.
So I'm looking okay, but we'll see how this bear comes out. I feel like, I don't know, what's the bearish thesis for gold? I don't think there is one.
I don't have one, so...
I mean, not just intraday, like in general. You know, if tariffs is good or bad for the market, I mean, I feel like it's going to be good for gold either way.
I know, right? I'm in agreement there.
Okay, so it's 10 a.m.
Let's see if things start rolling out or what goes on here.
I just posted in the space. I just replied to it. The gamma profile day by day and the probabilities in the Greek Sun queue.
Gotcha.
It is on. It's like it says it's on a TradingView chart. They have a library. I made it myself. Like you can't get this on TradingView. Still in UTC time. I have to fix that.
I'm going to take another ladder gold here, long.
Gosh, just look at NQ on a 5 we've done.
Yeah, it's just one big barcode.
There's bill breaker on NQ. I don't have a position, but if you're short, market's telling you to cover some.
Silver's breaking 95 slight low. Chance to break 96 at like 80-ish%.
It's a long wick right there.
Right back up.
Netflix has officially adjusted its offer to acquire Warner Bros. Discovery's WBD studio and streaming assets to an all-cash bid. Plan to pay $27.75 per WBD share.
Interesting.
What's that doing?
Currently 28.35.
SPY new lower day on the open. And now we're looking weaker.
Yeah, breaking 25,300.
SPY new lows. NQ can't get over 360 3 times now. Even IWM's trying to come in a little bit here.
All I know is this market looks weak, but I'm not shorting the whole right out of the gate to start my day.
No, I haven't gotten any real clarity for it at all. Unless you're just like scalping this little range around. But
Alright, I hate to bounce early, but I got some stuff to do, so I'll catch you
all
guys.
good.
I just one and done that one short. I'll catch you guys soon. Peace.
Sounds good, brother.
Netflix is introducing real-time voting. What the fuck does that mean?
Real time what?
Voting?
For
Yeah.
what?
What does that mean?
It means they vote in real time.
Fuck.
I guess if you were like in a game show, like you think you have talent or something, you could vote at home real time.
Ooh.
Mm.
Interesting.
Mm.
What a high demand thing that's needed to be implemented right now. Huh?
I think Apple could do that.
Jesus, bro, what?
I remember people texting while watching TV shows. Like you text in
Yep.
to a number.
Heck yeah, man. Like when you're watching American
Idol,
Idol at like
yeah.
9 p.m.
Yeah, that was it.
Your
Yep,
family
American
on the
Idol.
couch. Yeah. Hell yeah, man. That was the move back then. Man, everyone had to make sure you got home in time to watch the episode.
I'm pretty
It's
sure
like, man,
everyone
we
watched
got-
American Idol when they were little.
They're like, bro, we gotta hurry this up. My freaking American Idol starts at 8 p.m. I gotta get home.
What the
I
hell?
was sitting in the living room.
There's like a radio station that you would call in and like guess what word they're trying to think of or something. Battle time. If you won like a cruise or some shit.
Oh, give me that fucking juice. Damn.
Still ain't doing shit. Complete sideways range this morning. Had that first initial pop, and I mean, we really have not done anything since. So I'm kicking back. Mr. Emp's finding some sort of trade out there right now. We do have IB setting at 10:30, so another 25 minutes or so. Maybe we could get some clarity there. Looks like IB low formed first, which means as of now, unless we take out the new low on NQ, should take out the IB high first. With ES, it's going to be opposite because they made IB low second. IB high was made first. Unless that ends up taking out a new high before 10:30.
Where is Netflix headed after earnings tonight? If I knew this, I would full port and not tell anyone. I mean, it's a gamble. I have absolutely no idea. The only thing I'm concerned with, honestly, is I hope Netflix goes lower. Because I'm looking for volatility candles.
Oh my gosh, Wattbender said, the best team, the only ones not posting about other exchanges on MLK Day. Bro, if you're, if you have to do that, man, I mean.
So it's half of the second gold ladder here. Here we go.
Hey,
Let's do
Supreme
it.
Court does not rule on tariffs today. Supreme Court does not rule on Trump tariffs.
Of course not.
Boo.
Really? Was that the news?
Rolling again?
Yep.
That was it.
Wow, they're a bunch of teases, man.
Yep.
Boo.
Still doing nothing though. You know what? We keep going like this throughout the morning, I'm not gonna have anything, but that's all right. Start of the week.
It ain't.
I like to trade something.
Supreme Court is not going to rule on the tariffs today.
Kicker. I'm joking with you, Maxie. Do do do. Do, do, do.
It's happening in the 15-minute order flow. Let's see if we respect that.
The SPY's still just walking down.
A little weaker. Whole fucking range is gross, man. What are we doing? Gosh. Sweeping 15-minute, previous 15-minute lows, 15-minute gap. That's how we run through that. I think we bounce out of here.
Ooh, Intel tapped yesterday's open, 4.6 up now. America's chip stock is immune.
Wow, Bitcoin looks rough.
I made a chart of the resistance turn support that I think it's still got room to test. Let me pin that.
On Bitcoin, resistance has turned to support.
Yes, sir. I think the wicks have room to like 89.5. Technically 89.250. Also now an 8-hour order block from the first retest.
Do do.
The big bad bear. Still.
I'll give you a big bag in a minute.
We tried getting back above those monthly highs, just got fucking slapped on again. It's like a giant weekly bear flag to go right to 2025 lows. She's trying her best to hold up here, still sweeping those 15-minute lows. But not a whole lot of momentum in the market here. No directional momentum the whole morning, really. Bob Bender said 1357. This is on this target. There. Can we hit that? Oh, we got so close. Right about there, though. A couple cents off. Let's go, Wob. we trade only long positions, shorts, options. Majority of everybody in here is taking both longs and shorts. Some people also doing credit spreads as well on the option side of things. So, ESI. TSM got rocked. Yeah. Just trying to fill that gap, it looks like. Haven't filled it yet. Doesn't fill until like 331. And then you have another gap to fill right there as well, too. What is that? Like 329. Not looking amazing. So they said Adobe feels extremely cheap right now. I mean, yeah, she is.
Who?
Adobe. I'd say it's cheap for a reason right now, though. I don't know. We're basically at the bottom of this range on Adobe. The next big spot I have is going to be those October lows from 2022. I don't see much reason why we don't go take those out right now. So that's 275-ish. Still think we could trade lower on Adobe into there. Maybe we see a sweep of those lows and try and move higher from there, but looking pretty rough.
Not too far below the 2022 lows to the COVID lows of, what is that, 255.13 is a weekly order block there.
Yep. I am kind of rolled over back to the middle of the range. RTY is staying strong all morning. It did have a little consolidation, but trying to reclaim that now and move higher. Let's go, Tyler. Sold on this for 200%. Let's go. We love that. We love that.
NQ short, 3-minute CBC.
This price action is
Rough, ladies and gentlemen.
Is ass?
Yeah.
Absolute ass.
I think best thing is like size down and widen stops a little bit.
Yeah, that's the thing, because it's not like it's just volatile, but we're getting like clean moves. It's volatile and it's back and forth like this. So you gotta,
100%.
gotta be careful on the sizing for sure today. These are the days that would screw me up in the past. Sometimes they still do, honestly. Ethereum's also under 3K now.
NDX is walking lower here.
NVIDIA's senior director of AI infrastructure said demand is still outpacing supply for the computing industry. Still sitting on this 15 minutes. Fair value. Let's see if they run through.
Updating. I am looking for some. If we can hold here, I'm going to get into a short.
Citigroup
Alright,
CEO does not believe in a shift from U.S. assets and never bet against America's entrepreneurs and consumers.
Go back up. Come on.
Oh, Mr. Market, would you get out of this range? Oh, Mom. She's just a little tired.
Come on, flush it.
She's sleeping in extra from the long weekend. I got you, Sniper.
Can I get a mic check?
Yeah, got you.
I was hearing Jordan sing a second ago.
You serenading us.
Tyler said, just want to thank everyone on board. You guys have helped me tremendously with emotional trading and letting the charts work for you. Patience pays. Let's go, brother. I'd love to hear it.
Tyler, you helped yourself by showing up here.
Max. Yeah, because, I mean, you know, getting information from us or other sources is great, but actually implementing those things and doing it consistently is a whole different story, and that's all on you. So, good job, bro.
I got stubbed out.
And still holding this 15-minute gap. As long as we're holding that, I gotta think we'd still go higher, but just not any actionable things I can do with that, even though I think that I don't have anything.
Jesus Christ.
That was a bounce. Right off the bottom of that gap, the last little spot it could really hold.
Damn.
I do it.
Stop doing cute.
Here we go. Here's some cheese. Oh, we still haven't hit midnight. Jeez.
Guys, I saw a robot mowing someone's lawn yesterday.
Oh,
I
really? They're doing that now?
Yeah.
I see the ones that deliver food all the time.
Oh, they got them all over down here, but we hate them.
Yeah,
The
I've seen
food
people
delivery
pick 'em.
one's so dumb.
Yeah, it seems to not be like as intelligent, and it seems to not be the most optimal way to deliver food. I think that humans are still winning there.
Dude, they need FSD tech. That's why.
Yep. Jordan, I bought a drone this weekend. I bought
Ooh,
2
which
drones
one?
actually. Nothing good. It looks like an F-22 Raptor. I'll show you a picture.
Oh, let's go.
But I think I'm gonna get into drones, man. I think it's gonna be a new thing.
I love them, yeah. Definitely get one with a VR headset in
Huh?
the future.
What do you mean?
Like, when I fly my drone, I am the drone. I'm not looking
I'm
at
flat remainder
the
on
sky.
hold.
I'm wearing goggles, and the drone has a camera on it, and I am the drone.
Please send me a link.
Oh, I got you. I'll send you the one I have. Or actually, I'll send you the one that's the better version of the one I have. And it's still very affordable, I imagine, especially for you. These are the best, like, beginner drones, too, to be honest. It's very hard to fuck it up. And then once you get good at this, you can go and buy, like, a custom built one. But I just sent you that link on text. That's basically the one I have. Mine is just the first generation one, but same thing.
I have one of these, but not this. Like I have something from this brand though.
So this has full on freestyle mode where, normal drones go up, down, left, right, forward, back. That's all they can really do. This drone can go 360 degrees in all directions. So I can put it in manual mode, and I mean, you can literally fly it in any way you want. It's insane. That's how these guys get those crazy drone shots of like cars drifting and all that.
Wow.
It's insane. You should watch some freestyle drone videos than how they do it. It's a learning process, by the way, too. I wouldn't learn with your drone. I have a software downloaded on my computer. It's a video game, and you can connect your drone controller to your computer and practice on there. So what I did is I picked a drone and picked the settings that were as similar to the one I bought, and yeah, I was able to sit there and practice on the computer so I didn't crash it and ruin it.
Yeah, that's what I'm currently doing.
Yeah, by the time I got on the drone, I knew exactly how to fly it. It was like I've been flying it for years, So I highly recommend doing that.
This is so cool.
Here too. Still cooking. ES took out the highs, so looking a little stronger than NQ because it has not taken out highs yet.
SPX put credit spread is up 55%. I got stopped out on the SPY calls. I re-entered on IWM setting up that flag, and I just trimmed out half.
Gold short scout, 3 minute.
Yeah, I'm up 50% on my spreads.
Oh yeah, it's over now. They're
It's
done.
over. Yeah, they're cooked.
Yo, speaking of drones, Ondas is up 10.9.
Speaking of drones, yeah.
Yeah, completely undid that move we saw last Friday and some. Back to 1348.
Yeah, and even on Friday, it's not like we were changing trend really, like on this bigger time frame. We weren't breaking any significant spots that worries us. If anything, we just back tested previous all-time high pretty much.
Honestly, I'm up 123% on Ondas Commons, and there's only one person that that's been telling us to do that, and I bought some just to track it.
Damn right.
And, he was extremely right.
Hey, WAP's never led me astray before, so never has.
Is he around? No, I don't think he's around right now.
He always seems to be around somehow. I don't see him in the audience, but somehow he will hear this conversation.
He's the master lurker.
Yeah, he really is.
Is listening in on the alt.
Blueberry said my son was telling me the other day about the robot lawnmower at the golf course. Oh, golf courses are saying, we don't want to pay nobody else. Dude. Hire a robot. That's smart, honestly. I would
Look at IWM ripping. SPY new high day.
Yeah,
how it all changed really quick there.
One candle just brought the momentum, and now we're actually trying to get a leg up. ES is really doing it.
And this is why you don't do call spreads on a 2% down day.
Yeah, if you did it, you would have had to scalp it, get out real quick. I was thinking about it. I almost did it, and it would have been good, but it would have been a scalp, not something I'm holding all day. That's for sure. Silver coming in. Not really surprising given the moves it's had. And nothing about it coming in is changing trend or looking scary, but trying to dip a bit.
We got another cool Defense Spaces interview cooking up.
Let's go. How was that this one?
Oh, Palantir is so cool, man.
Let's go.
The next episode is going to be someone that makes jets. I'm not going to say which one.
Heard that. All right. Keep us guessing. Path breaking falling wedge. Yeah. Just a path. Well, we filled that overnight gap, that's for sure.
Zeta bounced off the 50 SMA. I grabbed 100 shares of that. I grabbed 100 shares of Rivian. I grabbed 100 shares of Oscar, also on the 50 SMA. I grabbed Oscar June and July calls. I grabbed Zeta June and March calls.
I expect the high to get taken on NQ. IB is about to set in 20 seconds. And the data says we should take out the high. That is the same with ES as well. It was almost going to change with ES, but we ended up making a new high day before 10:30. So all data pointing upside. We also still have this midnight open to get to 380.50.
We're rejecting that high again on NQ. Let's see if we break above. We break above and base, bam! Bada boom, bada bing, bada boom, bada bing.
Do you guys see the news that Spear is looking to make a second one in Maryland or somewhere near Washington, D.C., I believe?
They're what? They're looking at
They're
what?
going to make another Sphere, like that big ball that's in
Oh, yeah.
Vegas.
Yes.
Not sure if it's actually happening.
BMNR breaking orb high. I believe I saw they got their
Flagel.
share authorization approved.
Did I hear that BM&R is doing good?
You hear it's orb high.
Hey. That's been chopping sideways for a while. It's a bigger time frame. I didn't even realize AMD flipped back green. That was not green this morning. .3%. Not bad. Rocket Lab taking a hit today. ASTS is down a little bit as well, but not nearly as much. Oh, I didn't even realize because I was gone. Finally hit all-time highs on ASTS. Let's go.
Yes, sir.
Let's go. I've been calling for that, and then I didn't even know it happened. Shit.
I didn't know you were an ASTS guy.
I just like the setup recently. I'm really not.
I like reading about that stock. It's one of the cooler stories.
Yeah, the space names are cool. It is cool to learn about.
New high day?
There's midnight open. Asia high is the next spot I have. I would watch for rejection there. I've big 4-hour gap.
Spreads
Not
are
high to be
clean.
taken. Oh yeah.
Don't have to worry about spreads anymore unless, again, barring something absolutely absurd. Absurd. I went from red on the day with my holdings to very nice and green.
Same. We're about to be up $70 per contract gain here on IWM, ripping about to hit previous day low already. 263s are in the money, about to hit full target. They got me on SPY by a few pennies, so I had to get my revenge.
I
All
have
right,
us,
here we go.
I have us going on NQ to 423.
High risk MNQ long, 3-minute scout.
Oh my goodness. I haven't even trimmed my credit spread on SPX. I'm up 85% now. They're at 10 cents. Let's go.
Short gold, 3-minute EMA rip.
I'm long NQ on that little dip there back into those wicks. Need to see that hold and base. Then we go to 423 NQ. Come on, rip it. Rip it.
4-point gain gold, covered half.
I want the new highs. Give me the new highs. I know you want to. I got long on futures on that wick, like I talked about, and QQQ calls. Let's see if they pay me.
On this new high a day pushing. Stock is now up 12.5%. MU printed a reversal at 10 a.m. and 360 puts have been rolling in for Friday. Stock has been dipping since. It's back testing previous day high right now. If it starts to break down from here, just watch that move down to 360 and then previous day lows near 352.
Yeah, looking fugly.
Ugly with a capital fog. Now getting a decent bounce off the lows. DDOG is another dumpster diving name. So keep a look at the daily chart on DDOG right now. We charted this one on Friday with Will, talking about, again, all these dumpster diving names. That area down there between 115 and 116. Your daily is getting a really nice bounce off of that area so far, holding it. So keep an eye on that one. The other ones are INTU, Intuit, Now, NOW, Team, TEAM, and Sony as well. So a lot of dumpster diving names can get some bounces.
Come on, rip us through. Give him my 420.
Keep an eye on FANG, Diamondback Energy.
Rip it true. Rip it true. Rip it true. You bastard.
Can't believe you've done this. Let's see. A little bit of volume on the FANG 155s for February 20th. Someone bought 300 contracts at 457. They're currently sitting at like 515. Zeta. Ooh.
Yes, I added on that name.
Yeah.
50 SMA. Same with Oscar. And Oscar is going to expected to have the ACA at the end of the month here. Any day now.
Nice. That one's looking good. I just got an alert on QQQ. We're hitting previous week low. So if you're in longs, my opinion is a take profit area, but
There we
I
go.
would like to see a little bit of pop and move higher, at least over top of it.
I want to see it get to the 420. And then I want to trim.
All right, there it is. Previous week low. Hit QQQ. See what they can do here.
25-point gain MNQ sold half.
Yep, I'm trimming here.
Spy new highs.
Up
All right, watch for
$40.
rejections.
Up $40 a contract there on Qs. I trimmed. Stop and profit.
Nice. Let's
Stop it
go.
in profit MNQ.
Let's go.
They didn't get to that 423, but they got pretty damn close.
Watch ticker DUK as well. Duke Energy. It's holding up so far this morning. Looking decent. Ondas about to hit previous day high, going for $14.
See if they can get this high.
I'm debating on if I want to trim this SPX or not. I'm $90 out of the money now. I'll trim some of them here. Dude, oh, what the fuck? Oh, there we go. 80%. We're good.
What in the hell?
Boy, what the hell?
Well, an interesting Tuesday morning. Since it's a short week, we had to move some things around on the schedule this week. We do have a ETF conversation that we're going to roll into at the top of the hour here. I know it's a little earlier than usual, but schedule had to be a little switched around this week. So then we'll run that, and then after that we'll hop on stream. I think M's been on there this morning, but he's going to have to hop off. I might just take over when he does hop off. So keep that in mind. See if we can continue higher into this Asia high, but not going to have anything to do except sit in these spreads now. Gold trying to pop again, silver. They're getting nice little dip. Still up significantly on the day though. Intel calls killing it for me. Yeah, it's been ripping.
Oh, speaking of drone stuff, Ursula von der Leyen of the EU, president of EU, calls for a ban of additional exports of drone and missile technologies.
Ooh.
There goes team. Not Atlassian. Datadog almost hit 120. There's your smack and a half on QQQ, retesting the previous week low target for upside.
Oh, it did spike.
Yeah, just a little bit. I'd like to see us take that out eventually and just honestly cruise our way back up closer to, I mean, if possible, 616.70 on Qs, but wouldn't be surprised to see the smack here. I did sell majority of the SPX put current spread for 80%. Team is effectively at 2022 lows right now. I think this can get a decent bounce down here. You see a software bid? What do you say? You see a software bid, Team, Adobe kind of thing? Yeah, I do. I think some of these software names, especially some of them, I mean, just zoom out higher time frame, like you said, Team, and now kind of the same thing as well. I mean, back testing the 2024 lows, just near that like mid 120s area for Team. Yeah, I mean, you have a low down here from 2019, 2020, and 2022. All of them come down closer near this like 110 to 120 area. So it just had that nice, breakdown, a little bit oversold. I wouldn't be surprised to see some of these names right here start to catch a bid. I think you have opportunity for good risk to reward, getting some options contracts that have time.
Yo, that's it for me today, guys. been a pleasure. Catch you guys all tomorrow.
Sounds good, mates.
Ooh,
How's it going,
Me
brother?
too, guys. I'm not trading this.
Heard that.
later,
Tomorrow.
Maple. You
See you
need
guys tomorrow. Bye, Maple. Bye, everybody.
Bye, Mix.
Bye, bye.
I should have flipped short for a little scalp on Q's when I hit the target upside. Just to scalp it back down to right here. Let's see if there's any volume on any of these team contracts.
Team usually is like a spready name.
Yeah, I mean, it's not too bad. I'm looking at March 20th right now. I mean, like the 150s, I mean, $70 wide spread. I mean, 360 bid, 430 ask. It's not terrible. And that's what I'd be targeting would be around the 150, 160 area. Your 160s, very far out of the money, $70 wide. 165s are disgusting. I wouldn't mind the 150s. What is next expiration after that? Oh, look at the Qs.
They're doing poo-poos.
The perfect move upside, downside. Let me see. There's no volume in the Aprils. And there's some volume in the Marches, but not a lot.
Get 50% of this range we made from the 10 o'clock low. Nice spot to bounce here. We just hit 5-minute order flow under 50% retracement of the range, which means that's a gap in discount, which is if you're trying to go long, those are the gaps you want to use. A lot of people might have been looking at this 15-minute gap. The problem with it is it's not in discount. What's up, Frank?
What's up, guys?
Getting we'll do this kind of choppy morning, but we got a nice
Yeah.
on the upside.
Yeah, I'll figure. My God.
Intel hit previous day high and rejected that to a T. Now back to orb high.
I think on the higher time frame is looking really good.
Yeah, I looking kind of squeezy, to be honest. AMD is another one of those that, especially with today's bid from the open, like it looks like we're running back.
Run it back, Turbo.
Does keep the daily chotch valid.
What did you call me?
The chotch.
What in the hell is that?
The tick this morning, yeah, it was wild. It was like minus 1600. It was crazy.
Damn, Knott's just picking up some shares this morning. Contracts, huh? That Oscar.
Mm-hmm.
Let's go. Oh my gosh, Casey. People are crazy. That's wild. Well, we're tapping into this 5-minute gap still. Under 50% retracement of the range. We will see if we want to hold here. Still going to hold those call spreads the rest of the day. Or put spreads, sorry. And yeah, we'll cruise. No plays directionally for me today, but
Yeah.
it is what it is. I was kind of bummed that I wanted to catch something because I didn't catch anything Friday either.
It's a little risky. This big of a gap.
Yeah, we've had that volatility, so it's just not getting what I want. See if we can hold this gap here.
I'm gonna head out. You all have a good rest of the day.
No worries, BK.
Yes, sir.
We'll talk to you soon. Yeah, at the top of the hour here, we are going to lead into a little ETF combo with Han ETF. So keep that in mind. I know it's a little earlier than usual, but just again, we had to switch some things around on the schedule this week, and then we'll be back on stream after. That rolling here soon. I know. Still don't have many green names on my watch list. AMD's holding up. Everything else is right except for Netflix and UNH. But UNH, love the move. It's not up that much in percentage today, but it filled that gap because we gapped down pretty heavily. UNHG is up 5% from the low this morning. So I mean that's doing fairly well there.
I mentioned this name this morning as well as it was approaching $50. We're going to move upside, ticker IONQ. It is now ripping, going to almost previous session highs right now. Stock has been on a tear the last 15, 20 minutes, new highs. I do like this name or the daily squeeze upside from last night. If it can start to take out $52, can get a squeeze upside closer to 55.
Love it. Good stuff. I think we have Taylor up here, I believe. Taylor, are you up here?
Yeah, you guys hear me?
Yeah, I got you loud and clear. Do you want me to send codes to you, or do you want that on the Han ETF accounts?
Probably on Han.
Got it. We'll do. I'll send that right now. We can kind of get rolling into the conversation. I know top of the hour about to start here, but fun conversation coming for everybody in the audience right now. Obviously, we do a lot of ETF conversations, but this one's going to be focused on covered call strategies mainly with from Han ETF. So I'm excited to have the conversation. Taylor, appreciate you coming on. And I know we're going to have probably some more of the team coming on as well to chat. But walk me through kind of what's been going on with you guys. I don't think we've talked in a long time. I know we've had you on before. But I know you guys are diving into these covered call strategies, which we'll deep dive into. But walk me through how things have been and what kind of how the year was closed out for you guys and what you're looking at going into 2026.
Yeah. Well, so I mean, look, just so everybody's clear here, I'm part of Rex Shares, Rex Financial, right? So we partner with Han in the European side of things, and that was a new initiative for us starting in June of last year. So in terms of how we closed out the year, one of the big items on our list was more of that global expansion into the European marketplace, where you have a much more nascent covered call option-based income marketplace relative to what over the last 5-6 years in the US has exploded. Other initiatives, just on our end, for everybody who may be less familiar with us, we have leverage and inverse business. We launched, some crypto products in the 40 Act structure, which got us first to market in a variety of names. And then on the income side, we had our growth in income single stock covered call products. And continue to press on with our kind of classic EPI or equity premium income suite with FEPI, AIPI, and SEPI. But for the purpose of this call, I think it's to kind of continue on with what the evolution of that option market looks like, both from the overall marketplace, but also from our perspective in terms of product design and evolution. With our Han products, or our European products, we did expand upon that Epi suite with what we have not done with basketed products yet, where we have both fully 100% covered products as well as 50%. So a lot going on from my side. Excited to be, in contact with you guys again. It's been a while since I've done an X Spaces. So
Yeah, I know. It's a pleasure. It's a pleasure having you on. We're on here a lot, so. But
just drop in anytime.
Yeah. Reminder for anybody that's supposed to be on this conversation that might be in the audience as well. Feel free to request. Just hit that little mic button in the bottom left, and we'll get you on here as well. But yeah, we've had a lot of income strategies kind of come through over this past year. A lot of our audience has taken initiative on those. So walk me through, how these option-based income strategies have evolved, and why equity income is increasingly option-driven, and how persistent volatility has reshaped the opportunity set for income investors.
Yeah. Look, it looks like we have a lot of people on this call, so it's good to kind of level set here and just set what the foundation looks like. And I don't want to bore people and go back in time, but it's helpful to understand where we're at today. In the US alone, and this just helps us kind of move into the European landscape. But if you look at 6 years ago at the end of 2019, there was almost nothing by way of assets. Nothing meaning like $5 billion in assets. Relative today, you have $150 plus billion in covered call alone. You probably have close to $300 billion in outcome-oriented ETFs, which include buffers and nowadays auto callables. So you're starting to get structured note products into the mix. So we're starting to see a lot more in terms of different types of alternative income. But if you zero in on that covered call space, you have that $5 billion. And the starting point here is you had more kind of index-focused products. So, your Global X was sort of that flagship that was around before this explosion of product innovation. You're really kind of looking to juice premiums that you're collecting there, but you're really missing out on that capital appreciation of that upside. And then enter JP Morgan shortly after, right? They have a massive distribution team. They're top quality from that perspective, amazing marketing, really good investments. And they brought these products to market and they said, okay, look, let's do things a little bit differently. Why don't we cover 80% of the portfolio roughly? Let's write 2% of the money to maintain some upside, right? So they started thinking about this differently. They put that option exposure in equity linked notes, which gives you traditional income. Today, everybody knows about return of capital, and all new products are basically focused on kind of optimizing that, right? Then you start getting some other players come to the market. Okay, let's focus on tax. Let's do this. When we came to market, we basically said, look, from a product design perspective, there's a lot of nuance within the option market. And a lot of that comes down to the fact that major players out there right at the index level. And we'll talk about this in a little bit of detail. But we said, if we have a concentrated basket and we write on high vol names directly on those securities, we found through both research as well as in practice now that there are some pretty substantial advantages of being able to do that. And that's where you start seeing these much higher distribution rates amongst products. So from a kind of option-based income strategies evolution perspective, we've gone all the way from the most basic kind of index focused to now much more nuanced and well thought out constructed portfolios that are taking advantages of that nonlinear relationship between implied volatility and premium capture, right? You also start to see timing, right? You have weekly pay options. You historically had monthly, maybe quarterly. So you're starting to see the tenor change across these portfolios. So, from an evolution perspective, that's sort of how this has evolved. It's evolved massively. If you think about the European marketplace, where at the beginning of 2025, you had a few $1 billion in assets, kind of similar back to the end of 2019 in the US. We've seen, probably, Han might know better on the specific numbers now, but it's probably $8, maybe $10 billion in total assets across the space. So 60-70+% of that has flown in this year. And I think it's because, first and foremost, there's an educational aspect. There's communities like who we're speaking to today who bring this stuff to the forefront and kind of help educate each other, which is amazing to see. And when you think about, why this has grown so much, there's a lot of different use cases for broader investors, whether you're talking options at like the institutional pension endowments side of things, or, do-it-yourselfers who just want to learn about this market and take advantage and try and make some money, right? So there's a lot of different ways to do this, but equity income's evolved because historically people want income. And you're going for dividends. You're going for fixed income that you kind of know exactly what you're going to get in terms of yield profile. But on the equity side, you're focused on telecom and utilities and more defensive type sectors. With these, where you're looking to capture kind of some premium from tech and high vol names, you have a massive disconnect in terms of sector exposure. So if you're thinking holistically from a portfolio perspective, you're really able to kind of help diversify your sector risk, diversify your income exposure. So you're creating a much safer portfolio while meaningfully increasing the yield in your portfolio. And as I tell everybody when you talk about these products, you have to think about them from a total return perspective. Because if you're getting 90, 100+% in yield, you really have to look at NAV. Not saying that our products have just completely, grown NAV massively, but there's a balance between those two things, and total returns kind of the real true test to be able to identify that. And I think your last point on volatility and the persistence of higher vol today has reshaped the opportunity. I think if you think of 2010 to 2020 as a broad decade where you had quantitative easing from all global central banks, you had subdued volatility, subdued rates, it was very difficult to identify income pockets where you were stretching massively from a duration perspective, or just taking on unnecessary risk to capture even the slightest bit of yield. If you look at the VIX over that period versus the VIX the last 5-6 years, you're talking like 15% versus 21%. So pretty meaningful increase from a persistency and an average perspective, where now the baseline of rates is so much higher, vol is higher. So premium capture and these types of strategies become incredibly realistic to actually generate these types of yields. If you have 25% yield, 10 years ago, that was absolutely crazy. Today, it's very realistic. And quite honestly, in our products, when we're doing that, we're capturing more in premium than we're actually paying out. So we're withholding some of that. And that's by design to help stabilize NAV. But I don't want to just ramble on. I'd love to just kind of chat about these different points. If any of that kind of raises any questions, we'd love to dive in or continue on.
No, I love the thoughts. The way I see it too is just, you kind of explained it, is you're giving the opportunity. There's so much opportunity for the average investor to come in now and be able to make income off these products rather than having to learn all these complex strategies, right? And I think that's where you guys and our audience really mingle together, because there's just so many people out there in our audience specifically that might be working or just has things going on in life where they can't really put everything they have into something like this, right? And so where you guys come in, and I know there's other products out there as well, it's a blessing, right? Because you guys are giving the opportunity for these average investors to take advantage of the strategies that are out there. And we all know this past year, there's been a lot more that have just come to fruition, right? So I just love that. Shai, what's up there, Taylor?
No, I was just going to say it's a really good point. It's one thing that I say to people all the time. Like, it sounds like I understand you guys are doing a lot of this trading on your own with individual option contracts plus ETFs. But that's one of the best things about these strategies now is we probably have one of the simplest strategies out there, in the sense that you go on the website, you look at the holdings, for FEPI in the US, you see 15, FEPI in Europe, you see 20 holdings plus our option contracts. You know exactly what we're investing in. There's not some mystery black box about what's actually in the portfolio, which I think is really nice for those individuals who are starting to learn about this.
Exactly. Yeah. And I've been trading for a while now, and I've recently just started getting into the option selling side of things. Right. So I totally understand the people that are sitting back going, I don't know if I can just jump into that. Right. And it's beautiful. You don't have to, right? You can use products like this. So yeah, phenomenal stuff there. Shai, I wanted to come over to you and see if you had any takes on some of these new covered calls. I know we've seen a lot of the income strategies kind of this past year take a big lead on things in the ETF space. So I'm curious if you're doing any of this or you're looking at any of these kind of covered call ETFs and seeing any opportunity, or whether you're doing that kind of yourself. I would love to hear about that.
Yeah, probably can't add too much on the covered call strategy, or because I don't really participate myself. I invest for 5+ year lens on early disruptors and growth themes. So volatility is typically the price of admission if you invest in AI space, electrification, nuclear, etc. So covered calls doesn't really scratch that itch for me, but I can provide some commentary on the macro that's happening right now that probably fits the lens of a trader who wants to do covered calls.
Please, I would love to hear that.
Yeah. All right. Okay. So obviously over the weekend, the whole spiel was Trump floating the new tariffs on Europe over the Greenland acquisition. And I think this is funny because its history doesn't repeat itself, but often rhymes. This is very typical of this administration the past year or so, where they drop these kind of headlines on either a weekend or a holiday, mainly to give it more of a louder microphone, just because nothing else is really happening. So because the markets are closed, and then emotions get carried away due to a lack of news flow that happens during that timeline. So it's the same playbook that's been happening the past 12 months, and tariffs show up when position becomes somewhat escalated. The headlines start getting escalated even quicker. Markets stop wobbling on the uncertainty of, is this Liberation Day Part 2? And then reality will eventually set in that nothing actually changes. The goal isn't Trump to implement these tariffs at scale. It's purely leverage. Trump uses timing, pressure, and the public escalation of dropping this news on a holiday or weekend to force negotiations, and rather than permanently reset that global trade flow of additional tariffs or Liberation Day Part 2. So I think these announcements are just opportunity wrapped in chaos, if that makes sense. I think that this is one of those opportunities when the VIX hits 20 plus on something like this, when the underlying surface of what's driving this market is AI, and that has not changed. The AI cycle is very early. TSM just reported their earnings last week. They are the lie detector of the AI cycle. What I mean by that is they are the AI factory for the whole economy, and they control essentially the amount of how much NVIDIA can produce, how much AMD can produce, Apple, etc. So like, they are the most conservative player in that ecosystem. Rightfully so, because if they overextend themselves, they get too greedy, or they create too much capacity, that does create the opportunity of a frothiness, a bubble happening way quicker than anticipated. And that's obviously detrimental for a company like TSMC, who is a manufacturing company, so it's very cyclical. They told us that they think that the supply and demand is going to even out probably 2028, maybe 2029. That's a conservative estimate from TSMC. So that tells me that we are just years away from any kind of glut that's going to be happening right now on the shortage we're experiencing in AI. And maybe it happens in 2030. So like, I think that they're knowing that the gatekeeper of the economy is telling me this. And additional to that, he said he talked to not just his customers, but the customers of his customers, to make sure that the AI demand is very real. Because the worst case you can have in this AI cycle trade is this is just recycled spending that's happening across the hyperscalers. That's all the biggest fears. If you're an AI bull, like, that should be top of mind, that if this is just inflated spending that's happening between a handful of players, that there's no longevity on this actual AI cycle. I don't think that's the case, but you have to be rational if you're a bull. That is the Achilles heel. So there needs to be some kind of broad productivity gain, or some kind of real economic growth that happens beyond these handful of players, the hyperscalers. So I think right now, him telling me that there's additional layers of demand that's happening outside of those hyperscalers was really nice to hear as well, because that did relieve somewhat of my heartburn. So either way, the reason I'm saying this is on the covered calls front, the VIX hit a 20 plus, I think, this morning. I don't know where it's at right now. I think this Greenland episode is just the latest EU tariff threat that maybe produces a squimish of a couple percent pullback. I think earnings this cycle will probably relieve any kind of discomfort of a significant one. I think that if you're a long-term investor, this should be a thank you to President Trump for creating this volatility driven by policy theater rather than any kind of like real multi-year demand curve cracking from AI. So that's like my sign of like I would add. I did sprinkle a little ads this morning. I'm being a little more patient with it, but I think the bigger picture hasn't really changed. AI capex is very real. Infrastructure spend is locked in. TSMC just told us no supply glut until 2028. And any headline-driven pullback like this, for me, negates any kind of bearish thesis for myself. And I think it's just temporarily shaking weak hands out of positions. And if you're not as comfortable, then I think covered calls is a great strategy to maybe participate in this volatility. But I'll pass back to you, Jordan.
Hey, really appreciate that rundown, Shai. That was phenomenal. And like you say, earnings season's coming up. We're going to really see how AI and all that really performs. I know you were talking about TSM and how that's kind of the precursor for you for NVIDIA and AMD. So we'll see if they really perform this earnings season. But I'm curious, Taylor, to come back to you. Coming up to a big earnings season like this, this is more beneficial for your guys' cover call strategies, I would imagine, right?
In general, yes and no, right? So if you think about our covered call strategies, and the only reason I say no is not it's not beneficial, it's just perhaps a non-event in certain ways. So if you think about the way we've structured these, the equity portion is completely index driven, right? We're not making active calls on which underlying equities we're holding within the portfolio. We write monthly calls and we roll them monthly, but effectively it's active, but it's very systematic in terms of process, right? So the Tuesday before expiration each month is when we aim to rebalance the equities as well as roll those option contracts. So there's not as much of like, oh, here's a really interesting mispricing throughout the month. We can do that and take advantage of those opportunities depending on flow within the portfolio. But it's not as aggressive of going out there and looking for those opportunities because that helps us create a more stable and systematic approach to this space. With that said, when you start seeing a lot more volatility, whether it's from geopolitics or if it's from earnings announcements, that is just generally beneficial to the option writing program that we deploy in the sense that higher implied vol means we're going to either be able to write a little bit further out of the money or capture a little bit additional premium in the portfolio. And since these are income focused strategies, yes, I guess the end answer to your question is it's beneficial.
Yeah, I got you. Because I know majority of the time when we're selling options, I know that the higher volatility can be scary, but we generally like it because we can get that higher premium farther out the money, right? So I was curious if that's kind of a similar thing there. I know we touched on it a little bit, but for the people that are in the audience that aren't really educated on covered calls, can you walk me through, how you guys are actually working these and how the payoff structure is?
Yeah, so kind of like intro to options. I'm not going to spend too much time here because I'm guessing most people have some base knowledge. But if you think about the core, at the core, what an option contract is, if I own a security, it's $100. I have the ability to write a call option. Let's call it at $105. That would be considered 5% out of the money. Whoever purchases that call from me has the right to buy it at that predetermined $105 price. For that, I'm going to require that you give me a $2 premium up front. If the stock doesn't go above 105, that's great. I collected the premium and you unfortunately are walking away $2 less rich, right? If that stock goes to $120, you have the ability to exercise that option. There's no reason why you wouldn't either exercise it, sell it back to the market, or close it out. And you essentially capture that difference, the 120 minus the 105, minus the additional 2% or $2 premium. So at the end of the day, what an option contract really is, it's the, not to read this out of a textbook, but it's really the right to buy the stock at that predetermined price at a predetermined time. And what ETFs do is they basically deploy this at scale, so you don't exactly have to. So I'll just pause there and see which direction we want to go. I don't want to belabor the point of what an option is, though.
No, you're good. I thought that was a great rundown. I just wanted to kind of get that in there because I know there's some people in the audience that might be newer to these types of strategies. But like you say, most people are educated in the audience. But I just wanted to touch on that. In terms of how Rex implements covered calls at scale, what's like the index-based equity exposure, the systematic portfolio construction? How is that all working for you guys?
Yeah. So if you think, I've touched on this a little bit, right? So the equity exposure within our portfolios is index-based. So all of those on a monthly basis are rebalanced, on a quarterly basis reconstituted. All that means is that we recalculate the index and then you run through the entire screen process, at which point some stocks may come into the portfolio, some stocks may come out based on that index methodology. So structurally, that's how that's done. What we've done that's a little bit different is, as I mentioned before, concentrated baskets of securities, higher implied volatility generally, because we're looking at things like US technology stocks and kind of the crypto equity environment, not necessarily, or ecosystem, not necessarily cryptocurrencies. And really kind of honing in on that relationship between implied vol and the premium capture is why we designed these the way that we did. But just operationally, we have two different overwrite levels with our European ETF lineup. So we have FEPI, which we have in the US as well, which is a 100% overwrite strategy. We also have FEGI, FEGI, however you want to call it, which is a 50% overwrite. And then we have SEGI, CEGI, same basket of securities as SEPI in the US, but a 50% overwrite. Slightly different weighting schemes with our European products, and that just has to do with regulatory guidance and requirements for us to hit the right diversification requirements. But within all of these, we are targeting relatively short-dated option expiries around 1 month. It's a pretty standard roll process. Like I said, the Tuesday before expiration, we're not letting any of these actually expire or take delivery of the securities. We're closing them out ahead of time. And then, two nuances. If we think of the European product suite, the yield is actually floating relative to the amount of option premium that we've received, right? So slightly different than the US products where we are, we have a targeted distribution rate that we want to hit. Historically, we've actually collected a lot more in premium, but it's been relatively stable, which is why with the European expansion of our product suite, we wanted to let that float naturally.
Gotcha. Yeah, really good stuff there. And I know earlier you mentioned NAV and keeping NAV stable. I think that's been the biggest thing for people on these income strategies is really just making sure the actual total return is something they're willing to actually take, right? And there's been some back and forth on whether or not that's really what the ETFs are made for. But I know you touched on you guys really trying to keep that NAV stable. Can you explain a little bit further on how you guys are doing that? And is the goal to really keep NAV stable as well as this income every month, or are you really just focused on income and if the NAV can stay stable, great. If not, then it is what it is.
Probably a combination of both. Not going to blow smoke to anybody, right? Because I don't want anybody who's not understanding what these products are to be using them incorrectly. The goal of all of these strategies is income. We have the two different flavors in Europe where you're 50% overwrite, 100% overwrite. That does play a part into kind of stability of NAV. Also out of the moneyness. And this kind of gets to, from a theoretical perspective, why we created these the way that we did. So I've mentioned a couple of times the nonlinear relationship between implied vol and estimated monthly premium. And that might sound complicated in some regard, but in reality, all it means is that as you move to higher levels of implied volatility, you get an accelerating level of premium that you would capture. So call it a 20% implied volatility. Maybe you're getting 80 basis points worth of premium. If you move that out to 50% implied vol, maybe you're getting 3-4%. So that increase, right? You're doubling implied vol, maybe a little bit more. You're tripling, quadrupling, perhaps the amount of premium that you get. That sounds amazing, but naturally, there's got to be some give up. Otherwise, everybody would do it exactly that way. And that's where I think you mentioned it, implied vol, when it gets a little bit higher, can feel a little bit scary. But if you're approaching it the right way, you're using it the right way, you're harvesting it in a sense, then the balance of total return really comes to light, right? So with this, the way that we've done this is, first and foremost, we're capturing substantially higher premiums than a lot of other ETFs out there who have somewhat stable NAV. But the way that we're able to then help stabilize NAV is really through out of the money nets. So a lot of the big ETFs out there are maybe writing 2% out of the money, maybe a little bit more, maybe a little bit less. On average, what we've found that we're able to do consistently is between 5 and 10% within these strategies. And on a monthly cadence, in terms of rolling over your option contracts, 10%, 5% to 10%, becomes incredibly meaningful. So to the tune of, April 8th is kind of the trough after the most recent sell-off from last year. If you look at the time period from April 8th through the end of last year, our US tech product was up 100% covered, was up, I want to say 45, 50%. If you go back to that very specific date, you compare that with strategies, like a Global X, for example, where they write at the money, it took them about 6 months to get back to even, right? Back above water from pre-sell-off levels. That's because of that out of the money net. And so if you don't have the ability to A, grow NAV, which helps you from a yield perspective, but B, and probably more important, recover your NAV, then you really start to get into this NAV decay, NAV erosion environment, which becomes very tricky, right? We launched, and I'll use the US version of this as an example, just with the longer track record of US version of FEPI. We launched that 2+ years ago at around a 50 NAV. Today NAV's 45 and change, depending on what we've done in the last couple of hours here. That's a decay of 8 or 10% over a 2-year period. And meanwhile, delivering 25% per year, we call it 2.1% per month, is really meaningful for us to be able to maintain that. Now, I do understand the technology stock market as a whole did really well in that environment, which is conducive to these types of strategies. But it really depends on kind of what your frame of mind is, why you're investing in these, what you're looking to achieve with these strategies. If you're going out and you're using either a single stock covered call strategy on NVIDIA, you're writing options on your own, you have such tight, concentrated risk on the specific sequence of returns of that individual stock. Whereas doing this even in a concentrated portfolio becomes a lot more reasonable from a diversification perspective. And that helps you from a NAV stability perspective. So, when I think about that as the 100% overlay example that I give you, enter REX products through Han ETF in Europe, and we have 2 versions which are 50% overwrite. This is where you start to kind of break down, like, what am I looking for in this strategy? If I have the FEPI European version or UCITS ETF, and that's 100% overwrite, and then the 50% overwrite version, what's my outcome going to look like? Well, if the stock market continues to increase in value, and the underlying tech stocks do, I probably want the 50% overwrite, depending on if I really need a lot of income, right? You're going to get 12, 13% per year there. That might be a little bit more stable because you're actually capturing majority of the upside or half of the upside in that case, but you're sacrificing on the yield side, right? So there's a balance there in what your expectations are. If you think markets are going to be flat over the course of the next year with volatility, perhaps 100% makes more sense. You're able to harvest that volatility over that time period. And so that's where this becomes a really interesting conversation. It becomes very personal to what your goals are, to what your views are. But the way that you have to judge these portfolios, ours and everybody else's, in my personal opinion, is from a total return lens. hopefully that's somewhat helpful in terms of how we think about this.
Yeah, that was a great rundown. And well, you mentioned you guys are going, farther out of the money rather than maybe some of these other companies or products. Are there any significant risks that you see with doing that, or are you just going, hey, like this is what we have to do? There's not really any extra risk. But I'm curious, are there any real downsides to doing that?
I mean, the relationship and the trade-off really is just you capture less premium. With this level of implied vol names, we could write closer to the money. And if we did that, the premium we would collect would be huge. But in that case where, you have Coinbase or something that just rips up 25% in a day, you've just missed out on all of that, right? If you were 10% out of the money, you've missed out on half of that. If you were 50% overwritten, you've missed out on half of it, but you've participated in additional half. So maybe your beta is 0.75 to that market.
Yeah, it's really just finding that nice balance between the two, huh? Like you're saying.
Yeah, and I don't have any visual up here, so I'm gonna try to articulate a point here. Give me 20 seconds and hopefully it lands.
If you have something posted.
One second, guys.
Relationship between implied vol and premium being kind of a foundational theoretical or academic basis to why we created the strategies the way we did. The next step in the evolution of that thought is strike, and it's identifying appropriate strike. And your question to, are there downsides to being further out of the money? So the analysis that we ran to kind of help inform this decision was if you took a 25% implied vol and you had a position that was 1% out of the money, if you wanted to move that further out of the money to 5%, so just a normal step, you get a little bit more upside potential. You give up around half of the premium that you would otherwise collect, right? So that move is a 50% decrease in the premium. If you take a stock at a 50 vol instead of 25, and you make that same shift from 1% out of the money to 5% out of the money, you're giving up about a quarter of the premium on a relative basis by making that move. And what that told us is if you're constructing a portfolio of higher implied volatility names, you're more incentivized to move further out of the money than you would be if you were on more of an index level or lower implied vol name. Because the relative give up in premium for that move further out of the money becomes less meaningful from a premium give up perspective, if that makes sense. So from our perspective, it's actually the opposite of kind of the way you pose that question, which is, what the downside in writing further out of the money? The give up at the simplest sense is the amount of premium, but the relative amount of premium you give up at higher implied vol levels is less than if it were at lower vol levels. So by constructing these concentrated higher implied vol name portfolios, it makes more sense for us to capture more upside because we're not giving up that much premium. Does that make sense?
That makes total sense.
Okay, cool.
100%. It's the balance, right? It's the balance you have to find, and I think you're doing that perfectly. So I appreciate that explanation.
Hey guys, sorry, this is just Andre from Honey TF. Apologies.
Yeah, what's up, Andre? Pop in.
Hey, yeah, good. Thanks for having me here as well. And I just want to add to what Taylor said to briefly share our practical experience with investors here in Europe. And I agree with Taylor that I think the more we kind of talk about education and explain to people and discuss with them how covered call works. Covered call is not something that was invented just yesterday. It's true. It's been in the market for quite a while. But as Taylor laid out, it has really become popular in the US and now more recently in Europe, only in the last couple of years because of the new vol environment and the availability, maybe also of options market and the participation of retail in the market. And initially, the feeling on our side was as well that people want more income, that it was all about income. But the more you talk to people actually, and also with the experience now of creating a track record of these ETFs and how they work and how they function, the stability of the NAV and the upside participation do actually strike people as being more important than maybe some thought initially. It was just all about creating my income. But then again, if you think long term, stock markets hopefully and historically have tended to go up. So you know, many people realize I would actually still like some participation there. So that, you know, the idea of giving only overwriting 50% or, you know, not a full 100% does resonate with some, especially sometimes on the professional market side, when you speak to, you know, some family offices or other institutional investors, they do like these approaches. And otherwise, of course, that 100% overwriting is certainly very suitable to some investors. You know, I recently had a discussion with somebody who was approaching retirement, and they said, you know what, I actually don't need that much equity upside participation, but I still want to be invested in the equity market with some upside. You know, I don't want to give up completely. And it was for him, a beautiful idea to have this overwriting where you get to your 25-ish% as income every year, and you're very happy to give up, the big jumps, which you don't need anymore at that stage. And then this strike balance of not being too close to the, a bit further out of the money, 5-10% somewhere, again, resonates from the experience we had with Rex over the last year since we launched here in Europe quite well at Honey TF at least. So just want to add that. Thanks, guys.
Yeah, really appreciate you adding that in, Andre, and feel free to pop in on any other part of the conversation if you want. Well, I guess, Taylor, with what we were speaking about previously, this kind of answers my own question, but I would think like in almost any market environment, these could do well. Is there any market environment that you look at, whether it's sideways or, rip into the upside, that you're like, these aren't really going to perform the way I want them to?
Yeah, I'm going to annoyingly start my response by saying it depends on what your goal is, right?
Of course. Yeah.
I feel like
how it is in trading.
always, right? Always you start there, right? But I feel like if you were to talk to a financial advisor and talk to some of their clients, and they're like, well, I don't understand, the S&P 500 did incredibly well. Why am I underperforming? But if the S&P is down, then it's like, I don't understand, why am I negative? All right? Like trying to be able to like level set your own expectations with reality becomes incredibly important here. And so if I think about the outcomes of covered call strategies, there's a couple of different ways to frame this. One, you could look at kind of your classic covered call payoff profiles across different market regimes, and it's the best place to start. So if I broke that down in kind of your 4 key outcomes, it would look something like this. It would be a strong uptrend where your reference index or your underlying security or securities are up 20% within that kind of 1 month time frame is what we'll look at here. If we're writing in that 5 to 10% range, what's your goal? Is your goal to collect income and your NAV has grown a little bit? Like, that's a great scenario. But relative to the underlying reference index, you might be looking at yourself and going, well, if I just bought that and sold out 20% of my position, I'd have a lot more income and I'd still have a pretty solid position. That's kind of like mechanically and operationally complicated for you to do individually. Your goal, if you bought this strategy, in my opinion, should be to some degree income. So that's a difficult comparison to just draw on a regular basis. But in that environment, you've gotten your income and your NAV has increased, right? It's a win-win from that perspective, however you underperformed technically. If you look at like a modest uptrend, I like to call this kind of like the sweet spot of investing in a covered call strategy. So say if we write 5% out of the money, the underlying index is up 4.5. You've collected your, call it 1 or 2% for the month, and you participated 100%. So if that scenario were to repeat and repeat and repeat, you've outperformed your underlying index. You've collected increasing amounts of income, and your overall portfolio has increased dramatically. That's the ideal scenario for this. If you look at just a sideways market, this is where you start to see the difference of the level of volatility within your portfolio. In theory, point A to point B, market didn't move anywhere. You collected your premium. But if you think of the strategies that we have, where you have 15, 20, 25 underlying constituents, all moving with their own strikes, all, reacting to idiosyncratic risks, whether it may be a tweet from the CEO, Elon Tesla, right? Great example where something non-geopolitical, something non-economic, non-earnings driven could just actually move the underlying stock. It's not something you can think about, but you have all of those different movements. In that environment, you should, if it were one security, actually outperformed the underlying index. Your NAV hasn't moved at the end of the period. You've collected the income. That's where you start to think of like the term harvesting volatility. And then in a downtrend, in reality, you could kind of switch this into two subclasses of downtrend. One is a very sharp sell-off. If that happens over a short period of time, and you can take February 18th of last year to April 8th, kind of a almost 2-month period, where in these strategies, you're fully exposed to the downside with the underlying equity positions that you own. You can be down 20, 25% in that period. It's probably going to be 5-6% higher, like we saw with our US FEPI product, relative to the reference index because of the premium that you captured. So in that scenario, you're buffered to an extent. But if it were a prolonged, slow, like grind of a drawdown over 6, 9, 12 months, in that environment, you actually do really feel the effect of the accumulated distributions that you receive. So again, that's where you start looking at total return perspective. Now, when I first started my kind of response here, I mentioned it depends on how you frame it, right? So in that general concept of how I laid out those 4.5 scenarios, that's one option relative to one reference index. So the way that works is a little bit more akin to a lot of the larger strategies where you're writing on an index, right? You own the S&P 500, you write on the S&P 500. That's how that actually plays. With these strategies, I alluded to this in the sideways market. You have 20, 25 underlying securities within your portfolio. Each of them is receiving its own strike. We're receiving a different amount of premium from each of them. Holistically, right, you get a portfolio effect. But I just want people to understand, and there's an example that I have, which I'll try again my best to articulate here, but just so that people can understand that with these types of strategies, there are nuanced scenarios where performance really comes down to kind of the sequencing of returns and the where the underlying securities are relative to their strike. So there was a day in the fall, I had a client call and say, I don't understand. Technology's up, but the portfolio's not. Well, like, what's going on? And when I looked at kind of attribution and contribution to return, and you break it out, right? There were 25 securities in this portfolio. Half of them were in the money already. Half of them were out of the money. Of the ones that were in the money, there were, I think, 3 or 4 that were like up 8, 9, 10%. So in that case, you're not participating in the upside on that portfolio or on those names. Then on the ones that were out of the money, you had half that were positive, half that were negative return for the day. Of those, one name was down like 36%. So you start to take these individual components on a day like that, and all of a sudden you might question like, wait, what's going on? I don't understand the mechanics here, right? And so that's why at this kind of portfolio level, it's really nice to have that be outsourced to a portfolio management team who does this day in and day out and is monitoring the portfolio. They're monitoring the strikes. We are active in a sense where, if an underlying option contract falls off in value by 85%, we're going to go in and look if it makes sense to just close that out early, reissue a new strike, and capture additional premium to help enhance the income of the portfolio. So I just wanted to kind of help illustrate that, because the way that people talk about covered calls in different markets, if you think about it from like an academic perspective, generally makes sense. But there are additional levels and layers that go into the actual portfolio management to take into consideration. So I would say ideal scenario, modest uptrend where you're kind of in and around your strike level month after month. And outside of that, the expectation is generally to outperform the underlying reference index unless it's just going crazy to the upside.
Yeah, and the way I see it is, I mean, even those times where, market's ripping and you might be might be missing out on a little bit, it's still, you're safe from all the other times in the market, right? Like all the other times in the market that things are going sideways, we're not really making any money, maybe we're getting some downside. You're safe from all those moments. Now, you might not perform as much as maybe an underlying when things are ripping 20% in a month, of course. But to me, if when you're looking at income, to me, that's a great trade-off. I know people will look at that and be like, oh, you'll see the posts on Twitter everywhere where, oh, if I just bought the underlying, I would have made way more of this or that, right? But what about the downside? What about the times where market wasn't moving, right? You weren't making any money. These products were collecting. And
Well, it's funny.
That's where I think the big benefit is.
I was like, just a small random anecdote from me personally. I was talking to a friend of mine and he's like, dude, I just started writing calls on all of my like equity positions. He's like, I'm making all of this money weekly. And I was like, yeah, but you know, how are you? Different ways that these things interact. And he's like, okay, yeah, maybe I should have like a core ETF holding and then I can play around with some smaller pieces until I get really comfortable with this. But it was just an interesting, you know, I feel like people always say, well, you know, if your Uber driver, or maybe this was a while ago, if your Uber driver is trying to sell you Bitcoin, it's time to actually sell type of situation. But anyway, small anecdote from my perspective.
To the right.
Portfolio, or do you see people kind of focused on one ticker at a time? I'm curious what you guys see on the back end there, if you can share.
Yeah, and most of this is really kind of anecdotal evidence. There's, you know, Rex has, you know, been actually really kind of at the forefront of working and partnering with more kind of do-it-yourself for kind of end client users, which has been super cool to see because it's a very different thought process in a lot of ways, where you get the end goal. You don't have the buffer of like an institutional level client or a financial advisor who's trying to make decisions based on, you know, their perceived ideas of what their client wants. And so if you think about, you know, kind of bucketing them out, right? The number one way I see people use this is within some type of income portfolio. Right? I don't think many people, if any ever, would just grab one of these ETFs and have it be their entire income sleeve. If anything, you're kind of diversifying across managers, you're diversifying across strike profiles, et cetera. And so, you know, Andre kind of alluded to this talking to some family offices. You know, we had a really good client discussion recently. And, you know, the way that I think of these are a capital efficient way to meaningfully increase the yield of your overall income portfolio in this context. And what I mean by that is when you have a 25% distribution rate, then you don't need to allocate 15, 20, 25% of your portfolio to that to increase your overall income profile. Now, it depends on what your income profile is. If you're investing in things that get you 80, 90%, you know, this is a different conversation. But that ends up being a really, really nice way for people to say, okay, I can add 5% of it to this and my overall portfolio perhaps increases by 1%. I'm not blowing up my risk budget. I'm not taking an outsized bet on tech. But that's another angle that people think about, right? If this is a lower beta way to get exposure to a lot of these names. That's one thing I find, you know, when I talk about implied volatility, I talk about the benefits of implied volatility, as well as what to be cautious about in these types of strategies. And people, I feel like, think I'm talking about these unknown stocks that they've never heard of before. And then you show them, you know, the top holdings within the portfolios, and they're like scratching their head thinking, well, what are you talking about? This is Apple, Amazon, and, you know, Nvidia is probably higher of all that they know. Microsoft, Meta, Alphabet, Salesforce, right? These are names that everybody has in their portfolio through one avenue or another. And I think it helps contextualize for them, you know, that's okay. I've heard a million times tech is overvalued. AI is a bubble. You know, crypto is gotta be, you know, made up. So these companies, these chip providers, they can't last forever. If you've been on that side of that trade for the last 3 years, you've missed out on so much return. It helps you think from that perspective of saying, all right, well, let me take a different approach here. Let me pull some income ahead by selling options. And I can do that in a very structured format through the ETF vehicle. And then, you know, one other thing is I've mentioned earlier, kind of supplementing traditional income sources. So if you are somebody who's more of an equity income dividend focused type of investor, Andre said it perfectly. These strategies weren't invented yesterday, right? They've been around for a long time. They've been used in an institutional hedge fund context for a very long time. We've now made them available in a structured, liquid, transparent format for anybody and everybody to kind of dip their toe in the water and get used to how these trade and how they react. So, broadly speaking, there's a variety of different ways that clients are using them. The number one is kind of more in that income focused bucket. They're trying to either supplement lifestyle, supplement paychecks, just create some type of consistent cash flow. But then there's also the exposure given the kind of lower beta exposure given the thematic exposure broadly that we typically provide.
Are there any tax benefits with some of these strategies? I don't know if you can speak to that, but if you can, I'd be curious.
Which jurisdiction? Are we talking U.S. or Europe?
I guess both. I'd be curious on.
So I'm gonna have to provide or let Andre speak on behalf of Europe, but I can certainly give a couple of minutes or a minute or two on U.S. So from a tax perspective, that whole evolution spiel I gave in the beginning where I said JP Morgan came out and they provided their option exposure via equity linked notes was to provide essentially income from a fixed income instrument, which an ELN is. And from that, you get ordinary income tax treatment. What people quickly started to realize is that option contracts or the premium from options are considered a separate capital transaction. And what that means is the tax classification changes. So I want to clarify very quickly, return of principal is very different than a return of capital tax classification. Return of capital happens when an ETF's distributions are higher than the ETF's net income. ETF's net income consists of realized capital gains, dividends, and interest. So notably missing there is option premium. So what it's essentially saying is that cash came into the portfolio by way of option premiums and then cash left the portfolio and we're not classifying it as income. Therefore, you are returning capital to the investor.
Hey guys, so I'm going to hop off here. Absolutely amazing day. We had Q2 longs, which are great. We had two spreads. One of them is 100%. I don't expect anything from it. The other one looks really good as well. What do we got on that one? Hold on. Yep, we're looking really good on that one too. So I will catch you guys later. I have to go do some things. Get on a call at 12 here as usual. Other than that, hope everyone had a great day, and I'll see you later.
Instead, your cost basis is